We closed a little bit below the market maker's expected move for the day, starting to fill some of that downside gap from this morning, just a tiny bit. I mentioned earlier that this was starting to look a bit like an island top. That seems to be getting realized a little bit faster than I expected. There is a big gap to the downside back to delta neutral, which is a mean reversion point, so that could be moderately interesting, I guess. We fell back to about 56.18 here on ES. So we did finally fail the trend line into the end of the day. I would say 5600 to the downside is probably a fairly important support, and then like 5550 at the prior week open or prior week close below that. If this continues to slide, the broadening wedge is kind of out here, so a downside test could be pretty low from where we're at now. Take it some of the earnings weren't so hot. There was a gap, the big gap right there. See it? From here to there. Oh, Um, dollar kind of ran into a little bit of resistance. Yields moving up pretty substantially today after bottoming out early this morning. We saw yields at the back end of the curve move up, but mostly the belly, like the 2, the 5, the 10, the 7. Those are really where we saw yields move the hardest. But the 7-year back above 4.7, 10-year back above 4.2. Commodities moved up. There was some talk around sanctions against Iranian oil, which are supposedly now in effect. And then OPEC's production output came in about 200,000 barrels short, which obviously led to a little bit of a surge in oil. But gold continuing to sell off, silver the same. So most of the returns in energy, copper a little bounce back after its massive drop yesterday. And some agricultural and material stuff doing pretty well. Correlation recovered a little bit through the intraday and then broke down again into close. As I mentioned before, as we move into and past these tech earnings, there's a decent chance that the drop in volatility and the underlying is going to lead to the market makers shedding delta and shaking off some of their hedge from that dispersion trade going into earnings. And as that happens, it's likely that IV will fall on single name equities, and IV will rise on the index. And so a little bit of that appears to be playing out. With yesterday morning and this morning, but we're not really past all of the big earnings until tomorrow, so we'll see what happens with that. See if the performance out of Amazon and Apple is not sufficient to keep volatility as elevated as it currently is. Carry trade levered up a bit today, even with the drop in yields. We saw dollar rise, and it rose pretty hard against the yen. Forward yield on volatility ending the day at 2.9%. But we did get a big downtick in the 10-2-year spread. As that 10-2-year spread comes down, we may start to see demand for long volatility pick up. So this could be an inflection point, at least as far as the volatility market's concerned. Something to keep an eye on. Correlation on the 3-month turning around today. So we'll see if bond volatility follows suit. I would say some of the moves in bond today probably drove a little bit of volatility, but not a lot. Skew, actually, out of the money put interest picked up a little bit yesterday. We'll see if that trend continues. It might, actually, with the end of day sell off today. Correlation continuing to slide about 0.10 every day, but really VX not moving any lower than like 23.1 right now. And with correlation so high, it's very possible for vol to kick back up again. Still not a lot of moves in breadth, so that's kind of still looks like it's topping out. Fed fund futures declined pretty strongly with today's data on the ISM, um, dropping from yesterday's 2 rate cuts down to about 2.5 for the September contract. So Fed fund futures pricing at a little less likelihood of the Fed cutting rates, and that's probably due to instability. Uncertainty is the one factor that's most likely to drive the Fed away from any more rate cuts, and the ISM report definitely didn't add to certainty today. Fed fund futures ZQ open interest hits all-time high. CMA, interesting. Bear steepener falling by about 7.21%, but still holding above 50. Lastly, we'll take a look at the technicals. We did open back over the 50 EMA today, and then closed almost right at it, or at least very close to a test of it. Obviously, a sharp rejection right above the 50 MA without filling the entirety of the upside gap could mean that we see a continuation of this rejection into tomorrow and a move back towards the EMA 30. So that might be something to keep an eye on as we continue to move into like more and more bearish consolidation here. If you look, this period is kind of consolidating to the upside a bit, which isn't necessarily very bullish. So we'll see if that gap fills or gaps back down in the overnight and what happens there. Looks like ES is still pushing down for 5600 now. And then of course, you know, the upside targets 5696 here and 5402 down here are still the levels of probably the most important levels near spot right now, both for CTAs and for up or downside continuation. So keep an eye on those. We could take a quick look at Apple. Looks like it hasn't done fuck all. And it's about flat on the day and after hours. And Amazon is down fairly sharply. Amazon probably getting hit hardest by tariffs, but I could imagine Apple getting hit pretty hard as well. Maybe not in their earnings, but in their guidance. So probably keep an eye on that. But yeah, Amazon down about 4% in the overnight session. And yeah, I think that's it. So I'll see you guys tomorrow morning. I hope everybody has a good night. Later.